What's up, guys? In this video, I'm going to be taking my first shot at actually having a guest on a video call with me today. Going to be talking to a local residential appraiser, Danyl Collings with DC Valuations. Danyl is an exceptional human being. He and I met a few years back through a chamber of commerce. Danyl's even been kind enough to help sponsor a local young professionals organization that I've been a member of for a few years. Absolute sweetheart of a guy, terrific at what he does. A little bit more about Danyl. He started his career in residential appraisal back in 2009. He has over 9,000 appraisal assignments under his belt, ranging from single-family homes to complex properties requiring 3 different approaches to value. Back in 2018 is when Danyl founded DC Valuations, where he now leads a team of certified and trainee appraisers serving clients throughout Massachusetts and New Hampshire. So these guys provide trusted valuation services to banks, credit unions, law firms, real estate professionals, and private clients. Also a board member for the Massachusetts Registration of Real Estate Appraisers, and the list goes on here. He's a terrific human being, terrific at what he does. So without further ado, let's get into my conversation with Danyl Collings of DC Valuations, talking about all things residential real estate appraisal. So Danyl, thank you for joining me today. Appreciate your time. Welcome to the first one of these I've done, hopefully not the last, but again, appreciate you being here. But I wanted to just dive right into the conversation about appraisals, if that's cool.
Sure. And thank you very much for having me.
Of course. Happy to do it. It's an honor to be hosting here. So what exactly does a residential appraiser do, and what makes your role so important in a residential real estate transaction?
Sure. So, a residential appraiser, there's there's 3 different licenses. So first you have trainee, and that's someone who is trying to get into business. They're working with a certified appraiser. I actually have one trainee working with me, and I'll have another. Then you have licensed. So they originally had licensed appraiser, and that was an appraiser that could do anything residential, but it was kind of capped that you can't do an FHA loan. You can't do anything over $1 million in loan amount because they consider that as complex. And then they had another level called certified appraiser. So I'm a certified appraiser. All 5 of my appraisers in my office are certified appraisers. We're FHA approved. I just see it's easier that way, where we can do anything residential where the highest and best use is residential. So if we come up onto a property, and let's say it's a 6-family, but it can be knocked down and you can put in 20-unit building, I should say, Mike, I am not the appraiser for you today. You need a certified general, and they will, give the value of the highest and best use, which would be a 20-unit building.
Okay.
That's what a residential appraiser does.
Okay, perfect. So evaluating residential properties, and you have no real cap. You can do anything.
Can do anything. I've done $8 million properties. I've done $6 million condos. Yes, they're around.
Right.
I've done 9,000 square foot houses in Dover that were only worth 3.5 million, believe it or not. So
wow.
At the time, yeah, you think it's more, but yes. You
Wow.
put that in Needham, different story though.
And you work primarily in Massachusetts, but also go up into New Hampshire. Is that right?
Yes. So my license is Massachusetts. I have an appraiser up on the upper North Shore, and he goes into New Hampshire, lower New Hampshire.
Okay.
So yeah.
Gotcha. So your team can go from Mass to New Hampshire.
Mm-hmm.
So tell me a little bit about how appraisers actually determine the value of a home. Is it as simple as, square footage and comparable properties? Tell me a little bit about the layers that go into the appraisal process.
Sure. So, the number one thing you got to do, Mike, is the same thing you do. You're going to look at the property, and you're going to look and see kind of what do you have? What kind of condition, what kind of quality we're talking about? How big is it? How many bedrooms, bathrooms? Does it have tremendous acreage? Does it not? So we are sort of really going to get a good view of the property. We move away from the word inspection to more viewing. So we viewed the property. I say as you sort of suck it into your head in regards to, okay, this one is, a 2,000 square foot house that I've measured. We have to measure to and verify that. And then it has 4 beds, 2.5 bathrooms. It's in great condition. They updated it last year. And then I'm looking out into the market of recent sales. If I could find something within 3 months of that's similar. What's similar in this subject's neighborhood that would compete, and that's or comparable, and then that's how we determine kind of value. But I always say you have to understand the subject first, because if the subject is incorrect, if I'm going in and saying granite, glass shower door is beautiful, and another appraiser saying, grandma's house or grandpa's house, then there's a disconnect there. And that's why we have photos in our report. We have measurements of what we measured. So we're providing certain aspects of what we did to prove that we did it.
Right. And so tell me a little bit about, you mentioned the 3 month sort of window for recent sales. What if there's not a, immediate comparable that's sold in the last 3 months? Is what's the next step there? Do you go back in time, or do you go back and sort of widen the range of types of properties that you're looking for?
Sure. And great question. So my ideal would be 3 months, but we've had supply issues with volume and not enough houses on the market and selling. So, we've gone to the 6 month. I think anything after 6 months we can do, but you also want to do two parts. So first you want to stay in the neighborhood, because we have to identify the neighborhood, understand the neighborhood of that house, of what's competing. And then we're looking at that neighborhood. We can go out and then we can go back. So we do a little bit of both. And then when we're doing that, we're looking to see now if there's any kind of time or seasonal adjustment that has happened. And the way we do that is we look at a large amount of data over 12 months, and we can see if there's a time adjustment. So you'll see those in our report too. But ideally, anything 3 months, wonderful. If I got to go back 6 months, I'm keeping an eye on that time adjustment. 9 months, 12 months. We can go beyond 12, but I call it the first three comparables have to be within 12 months. That's sort of a Fannie Mae, Freddie Mac, Ginnie Mae requirement.
Okay.
I could use a comp 4 or 5 that's older if it helps me tell the story of the market value, what's going on, which we've done. Yeah.
So when you talk about the time window, you're sort of referring to the factors that are impacting the current home market, whether it's interest rates and, what the trends are.
Yeah. I mean, everything you want is as in a constant, and typically a 3 month window is good. I mean, there's some markets, where just there's not a lot of sales. And so you go back, but you're also going out looking in competing neighborhoods. And that tells you that, okay, there's a time adjustment. There's not, the value supported. It's not. So it's just a kind of you prefer to go, I would go back first. And then if I don't see much, I would go out, and then I would compare the two and just make sure I'm still in a competing neighborhood. Because, we've had, you have neighborhoods sometimes that are tied to a certain school,
Right.
that people want that school. Obviously towns, certain towns, a lot of towns are driven by school districts.
Mm-hmm.
So you want to make sure that you're looking at the same competing factors of that property to the comparables that have sold.
Right. Perfect. So from your perspective, what does it really look like to sort of become involved in a real estate transaction? Like from your end, how does that happen? Like what's the beginning of that process look like?
I look at us sort of like, how the home inspector works for the buyer. And if the buyer's okay, they can share the report with you as the agent. We are hired by the lender usually when it's a mortgage financing transaction. And I'll add to that, we also do appraisals for divorce. Unfortunately, it's a life-changing event. We do appraisals for estate purposes. We do appraisals for people who just want to know what the value is. We do appraisals if you want to build a house. I could tell you what the house is going to be worth when you build it. So we do, I call it, we can do past appraisals. We're looking at the past, which is estate, current, and then future. And we also review each other's reports. So there's just a lot of different things that we can offer in valuation But we are hired usually by the lender, could be a bank, could be a mortgage company, and they want us to go to the property to verify the condition of the property. And they have access to the MLS sheet and everything, but we're that independent third party. We're not tied to any, bonus if the deal goes through or not. We're paid a fee for it. We go in, we tell them this is the property. We're making sure it's safe, sound, secure. I have a report on my desk that he's doing an addition on the back in Arlington, but he has a stairway outside that has no railing. It has to be addressed. So I'm like, me and my trainee could have fell down there. So we're also looking at safe, sound, secure, and then we'll send that report back to the client to tell them that, yeah, this is what you have. So I always say eyes and ears of our client. That's what we are. And we're giving them an opinion of value supported by market data.
Right. So as a lender or a loan originator working at a bank, am I reaching out to you knowing that, okay, Danyl knows, this neighborhood, he's my go-to guy, or is it more like randomized with the selection of which appraiser goes to which property through which lender?
Yes. And Mike, I get that question all the time. I go to a house and they say, oh, my loan guy, Paul, do you know Paul? I said, I don't know who Paul is.
Right, right.
So we have what's called firewall. So, when the market kind of melted down in 2008, 2009, there is a law that came in called Dodd-Frank. And Dodd-Frank stipulated that there had to be an appraisal person or department separate from loan production. So we're dealing with, we could be dealing with Julie at this bank and Pamela at this bank, and they're separate from loan production. They don't get compensated based on if loans go through or not. And then we're sort of on the kind of a round robin. There could be 5 or 6 offices on there, and then it's our turn to get an order, and we get one, and we decide if we want to accept it or not. So that's kind of how we work today. When it comes to, attorneys, there's no round robin because it's not for lending. So, if an attorney, if I wow them and charm them, I can take all the business as I would love to. And, I'm proving that I am a reliable person. And that's the key. They want to offer a reliable suggestion to their clients. But yes, we do not have any connection or contact with loan officers or originators when we're doing our appraisals.
Okay.
Because they don't want us to be influenced.
Right. So to avoid some questionable loan practices like that impacted that housing market back then,
Sure.
there has to be some separation.
Yeah.
All right. Makes sense to me. Good to know that that's happening out there.
Mm-hmm. Mm-hmm.
So what do you feel like are some of like the biggest misconceptions about or buyers and sellers might have about appraisals themselves?
I think some of the biggest misconception is sometimes they have to understand, we call it scope of work. So one bank we do a lot of work with, we do their home equity. So when someone applies for home equity, they send us out to do an exterior appraisal. Sometimes, Mike, the house hasn't been listed ever. I have one actually. It says it's a raised ranch with 5 bedrooms and 3.5 bathrooms. That's probably incorrect. But I have to go by that because that's what public record says. That's what the assessor card says. And I can add a note that, but I have to go by that. So sometimes we get pushback on those because they're saying, no, that's not accurate, but we've never been in the house. So those are like limited scope because it could be a home equity for 40,000 or 80,000. That's not a big number for a bank. But when you're taking out a loan on a house and it's a new house to a new lender, they want to know everything. So that's why they order an interior. And, one of the biggest misconceptions is that the buyer's paying the lender for the appraisal, but our client is that mortgage company, that bank. And so we go to the property. We may ask them information, like let's say it's a refinance. I'm asking you questions. Once I leave, I'm going to develop my opinion of value on my report, submit it. And if the borrower has questions, they have to go through their loan officer, who goes through the appraisal department, who sends us the request. So it's kind of like over, the hill, and then or over the street, and then we respond back whether we make an adjustment in the report or we apply in the report. We give it to the appraisal department. They give it to the loan officer, and usually that's it. So
Okay.
it's kind of it's a longer process where we used to be that the loan officer would just reach out to us, and but it's okay. I'm okay with it. And even if we're pressured, and when we are pressured, I really don't care. It's it's my license, and my appraisers understand it's our license. So, we are respectful to borrowers and real estate agents, but we explain to them that we are working for the client. We have to be independent and keep that independence.
Okay. Gotcha. So the client's the lender. Even if the customer or the borrower wants to communicate with you directly, there's a specific order of operations that has to be followed. And that's the way it is.
Yeah, I mean, I'll add to that, if there's something that the borrower knows that's specific to the house at the time we're viewing it, very helpful. Let's say you're a listing agent and you know that this comparable down the street had a probate death or is an estate, and usually we could see it in MLS. But if you tell us, oh, that's why they went low, that's very helpful information. So there's a lot of information that we can get at the time we're viewing the property that we can incorporate that's helpful, and it helps us tell the story as opposed to answering on the back end. No one likes revisions. Revisions are just terrible. So,
Yeah, that's fair. So yeah, the more information that you have, the better. So it would be helpful then if me as a real estate agent, if I was listing a property and the appraiser had set up the appointment to come and check the property out, it would be helpful if I brought some comparables that I felt were a good match for the property, maybe even some additional information I had about those comparables, like if there was recently an offer accepted on one of them, or if it was, an above list price offer, or there was a number of offers if those homes were competitive. Basically, the more information that you have, the better going into an appraiser or appraisal.
yes, I will add to that. If you're printing out MLS and giving it to me, don't bother because I don't get paid enough. I'm not getting paid big money on all these to go. We have access to MLS. I would say the finer tuned your information is, the better. And I'll give you an example. I went to an event last night. I did an appraisal in Beverly on a brand new construction house that's going to have actually an ADU, and the investor, the borrower, is very knowledgeable. He knows there's no other ADUs in new development houses in Bedford. He's going to be the first. So that's helpful. Two is he gave the bank a list of 4 sales, and I still went through my independent process, and 3 of them are the ones that came up in my search. And I saw him yesterday and said, great packet of information. You gave us the house you're going to build with the dimensions on it. You gave us all the stuff you're going to put in it. The cost doesn't matter to us. And just detail. And it made my job easier. It's when you put in all this other, just when it comes to sales, I tell everyone I only want to use 4, maybe 3, 4. So I don't need 10. Give me your best 1 or 2, or 3, and that's all we need. So,
Yeah, that's fair. Yeah, that makes sense. Good to know. So tell me a little bit about what your thoughts are on the Zillow Zestimate, which is that number that Zillow will pop up below a listing, whether it has recently sold or even if it hasn't recently sold, it's its best appraised value according to Zillow of that home. Tell me a little bit about your thoughts on the Zestimate.
Sure. And I've had this chat with my own mother, who tells me about Zillow, and I say, Mom, stop it. But, Zillow is a marketing tool first and foremost. And I tell people it's a marketing tool to generate leads that can be sold to real estate agents, and they're good leads. And that's what they're for. If there's a recent sale, yeah, their algorithm is very impressive, but it doesn't mean that it can tell you what's going on in the market specifically. For example, if you're a refinance and you haven't been if you've never been listed, how's Zillow going to know what your house is worth? They've never been inside your house. And then number two is, it does track like recent sales. And in some areas, I'll tell you, Mike, if they're cookie cutter houses, yeah, it's probably close. But, in New England, we have splits and raised ranches and colonials and Victorians and cottages. That's why we have such a wide mix. And that's why I think we have issues with Zillow here, as opposed to, you go to Arizona and you got a track of 100 houses. Yeah, that's pretty easy. The 3 houses sold for 300. That's what I want to pay. So I think Zillow has its place in regards to marketing. I think it may work better in some markets. I think in my market where there's just a variation of houses and things like that, there's issues. And they have, imagine if my reports had on the bottom, if I'm wrong, you can't sue me. That's what they have. So are you going to trust the biggest asset, and that value, as opposed to a licensed professional? And this is what we do all day.
Right. Yeah. At the end of the day, Zillow is sort of just an algorithm. They don't know the current market. If the market's changed up here week to week sometimes. So never really know what the situation is. And on top of that, they don't necessarily know that you just updated the kitchen. Maybe you just dropped 75 grand on the kitchen. They don't have that information unless you plug it in separately.
And
So
Zillow can't, I think Zillow's not helpful if you're doing like an estate where you're looking back in time. That's one. And then Zillow can't forecast, if you're doing a relocation, if you're doing, a house where, like you said, this one just went under agreement. I have the PNS. I can show you. Zillow can't account for that. Doesn't have access to that. There's a human factor that still provides a major benefit in valuation.
right. Exactly. Yep. And it's it definitely can be, it's a good little data point to have, and it can be right on. I've seen it be right on, but I've seen it be 30% off, which is not a small percentage, when it comes to where you want to position your home to draw in the highest and best offers if you're going to go on the market soon. So speaking of home values, what do you see in like the general greater Boston real estate market? What sort of features are you seeing that people are willing to pay a premium for? What features tend to add the most value right now?
I'm sure. And I have them in my house. I'm poor. It is, like glass shower doors. It's a huge thing. If you own a glass shower door company, you're doing very well. A lot of people like really cool paneling. Like I've seen a lot of different colored paneling. We've gone from accent walls to panel walls. Um, recessed lights are still great. I'm seeing, how you have those kind of, how do I describe those lights? It's sort of like circular and like kind of wavy. It's like they're really, really popular right now. Um, board and batten exteriors to kind of change things up a bit. Um, yeah, maybe an EV charger here or there, a pot filler. Just when I go into certain houses, Mike, I expect to see things. Like if I'm going into a 5,000 square foot house, I'm extra checking for every bedroom, and as if there's a bathroom off of every bedroom. Those kind of things. If I'm going into a 2,000 square foot house that's been around 1960s, it's probably going to have two bathrooms upstairs, or et cetera. But a lot of the island counters and the pendant lights, those are still popular, and people are getting funky with the pendant lights. So yeah, you see, and granite, everyone was granite. Now people are looking at quartz. So yeah, there's a lot of those finishes, I think, that really take it to another level.
Right. Yep. So speaking of um sort of, you kind of mentioned like, so you're looking for specific things in specific properties. And I had another question that I was going to ask you in a few minutes, but may as well ask it now because it's a good lead in. So how do you look at sort of more luxury level properties versus, more standard homes that you're seeing change hands every day. You know, those 600, $700,000 properties that are changing
Sure,
hands regularly.
sure. I mean, it's amazing. The quality and finish, from just all the things, some of the things I mentioned with pot filler, but it's just the detail of some of these houses. Wine racks. And now, I've been in one house that had two wine rooms. I mean, not one, two. Gyms are very popular, offices. And now we're getting into ADUs. ADU is a huge thing. And so, I'm seeing a lot of the suite for the husband and wife or partners. I'm seeing, or the mother-in-law, the father-in-law. So I think we're moving really big towards that because the cost of housing is a challenge. And
Right.
that's why I think the ADU is trying to help with that. So those big houses, I usually it's some sort of suite, is the big thing. And obviously the crazy bathroom with all the stuff, heated floors, this and that. So yeah, like you said, there's things that I expect, like when I'm going into Needham. There's because the market is expecting that. That same buyer is expecting that from the other sales. And that's where you deviate. Imagine, a 5,000 square foot house in Needham with no garage.
Right.
That's going to be a tough one.
Yep.
They want to put their nice cars in that garage. So you just don't want to deviate from what's typical. You can paint whatever you want, etc. But, when you change something that's physical that they expect, it can be problematic.
Yeah, that's a fair point. So you're seeing a lot of these ADUs starting to pop up. I feel like almost every buyer that I've started to work with is looking for a little bit of extra room on that property where they can park that ADU. And I don't know if it's you can tell me your thoughts on this, but I feel like, after COVID, when people were starting to shift away from living in the city and near their workplaces, now everyone can work remotely. They're able to spend more time with their families.
Mm.
It's sort of all, at least in my opinion, because I got into the business like right during COVID. So that seems to be what's affecting, people's move to the suburbs, people wanting to be together with like, their loved ones versus, living in town where their parents are out in the suburbs. Tell me a little bit about, how you feel that's impacted ADUs or what else you think is impacting ADUs.
I've seen that exact shift that you just described during COVID. I mean, we were going into houses with, mask and PPE, and people were moving home and kind of bunkering up. And I think the ADU I think it's a fair idea. I had a conversation with a CEO of a bank out in Worcester County, and he made a good point. And I agree with him. I think the affordability of building the ADU is going to be the challenge for a lot of people. If you just bought a house and now you're supposed to drop 200 or 250 to add another, because you have to also connect it to sewer. Gas. You can get away with gas and go electric and then, electric heat pump, but there's still things you still got to touch the plumber, the electrician, all the trades and everything. Foundation, where you're going to do it. It's very expensive. And his opinion was that the cost is going to be the challenge. So
Sure.
I think, I think the MBTA approval, where they want more housing there, the MBTA is in the right direction. And we were just talking about that last night. But yeah, I think ADU, I'm curious. I mean, I saw an article and I talked about it with a mortgage company a couple months ago that, the numbers are not where they thought they would be. And I think cost is going to be a challenge. And ADU doesn't make those illegal units instantly legal.
Yeah. Yeah, that's fair. Yeah, it'll be interesting to see how it, continues to pan out over the next like 5 or so years. But I feel like, people with those post-COVID interest rates dropping, even some of them into the high 2%, people are doing everything they can to hang on to, whether it's, you know, additions to their current property. They're doing everything they can to not have to leave their current home and give up that interest rate. So I think that's definitely been a factor as well.
Mike, we can also add Airbnb.
Right.
So now you have a property, you hold on to it, you're using it as an Airbnb. It's another income source, but now there's less property available because people are leveraging all these properties that they used to just either rent or give away. So there's just so many factors, that I think is causing that housing crunch. Obviously, rates too as well. But I can't tell you how many people I speak to. I have a friend who's got two ADUs in Thailand. He's in New York. You know, And it's amazing. I have a coworker who has an ADU in Medford, and she does really well. So on the ADU Airbnb. So I think that has really changed the game. Because imagine if you could, you can Airbnb something in Florida, and then you want to take 2 weeks and work on your game and go down there. Now it's you're using a vacation home, and it's actually paying for itself.
Right.
Yeah.
Yep. Definitely a lot of people moving in that direction, or at least looking for that as far as an option, maybe in the future, if they're, planning on getting their hands on an investment property, whether they're going to move into it now, use it as an Airbnb later. But it's definitely a question I'm getting from a lot of buyers. So let's switch gears back a little bit and talk about what happens if an appraisal comes in lower than an agreed upon purchase price. If a buyer makes an offer on a home and the lender sends the appraiser out, appraiser says, look, I don't see any evidence that this is worth what you're about to pay for it. What happens then?
Oh, what's great is they made some recent changes, which I think has made that process, ROV as they call it, easier. Last year, they implemented an ROV process, and though the administration canceled it, a lot of our bank clients and lender clients have kept it because it makes sense. So we give the report to the client. The borrower has an issue with it. They fill out this form. They can provide additional information, and they can provide comps, and then we look at it, we address it, and if it warrants an addition of a comp, I did one last week. It warranted addition of a comp. They had a really good one, and the value was increased. Or if we go through them and it doesn't change, or I say, give us something better. This is the key. Give us something better that's in our report that is either sold at the same time or more recent, and that is closer. And if you
Okay.
do that, usually you're going to win your case. It's if someone wants me to go 5 miles out and everything I have is within a mile and a half, that doesn't make sense. So that's a tough one to prove. And then two is, once that's done for us, we don't have to touch it anymore. Where in the past, sometimes we get clients and they just keep peppering us, Mike, keep peppering us, and we'd have to say, okay, this is your last shot because we don't get paid for revisions. They're terrible, as I mentioned.
Right.
But we want to be fair and we want to be respectful to someone's questions. And, I think any good professional appraiser, you write, think about it, you put all this work, you write this report, and someone has questions about it. I don't take it personally. Maybe I missed something. I am human,
Right.
and I've changed things in the past, and there's no problem with that. And I think it's just having the right attitude about that. But the process is very good right now, the way they have.
Right. So you're just saying that if someone wants to, if someone has an issue, if their appraisal comes in low, they have an opportunity to present additional evidence that supports their purchase price, or it is what it is. You can't put the bank or the lender sort of into this property if they're not going to recoup their money if the borrower defaults on their payments.
Yeah, I think the key is, and you probably see it. I mean, when you have a property you're selling and it just has, I call them issues, but just differences. Like a friend at Keller Williams called me, and she's selling a property in Rhode Island, and it's on a highway. You know, it's not that they won't lend to it. We have to find comps. What's the effect on that? Banks get a little weary because if you think about it, if the market goes sour, and if buyers have a choice, they're not going to be running saying, "Hey, Mike, I want that house on 24." No, they're going to say, "Give me the house that's cul-de-sac, nice street." Because most people, they don't want that noise or they don't want the train behind them. So those things are financeable properties, but we have to show the effect. And sometimes I think people don't understand that is when I go into a house, I say, I have to find something on a busy street. I have to find something that the train's behind it. I have to find something that has a water view. Same thing, just as bad, good. Water view, frontage. Yeah, that's good for you. So we have to match it up. And sometimes people may question why we used a certain comp because we have to provide that feature. If
Right.
you're in a golf course community, if you're in Blackstone, I got to find something in Blackstone. If I got to go back in time, I'll get it.
Right.
Yeah.
Yep. Yeah. And then, like you said earlier, the different types of properties and different neighborhoods. There might be only one or two cul-de-sacs that back up to the expressway in that neighborhood. So now you're working with, potentially five or six different styles of property. Maybe a couple of them are the same, but maybe those other properties haven't sold in the last 20 years. So it can just add another layer of difficulty to, getting that number.
Yeah. And I think it's knowing the market. So I can tell you, you know, the last, maybe 2 to 3 years where the market was just nuts. Some people didn't care if it was on the cul-de-sac. They just wanted the house. And people were overbidden and that was telling us, okay, they don't care about these things right now. That's where they say, what's an adjustment for this? And we always say it depends. People hate that, but it depends. The market could be on fire. They don't care, versus, okay, the market's more even. There's more stuff on the market. Yes, the buyers are showing you, I'll take this one over that one. And you'll see it. So
Right. Yep. 100%. Um, so I mean, I feel like we covered this a little bit already, but um, how do you feel like the location itself, let's say specifically like a more urban location like the city of Boston versus maybe some of these towns on the South Shore, how does that play into the appraisal process?
I think it's important. I mean, I used to own a property in Jamaica Plain, for example, and it's a great community. I wish I still owned it. That's another story. But
I remember you talking about that. Yeah.
oh yeah, I drive by all the time. I say that building looks great, but it was on South Huntington on a busy street, but Jamaica Plain is is a desirable neighborhood and it's done really well, as well as West Roxbury and Rosendale. So it's just understanding those little neighborhoods, finding stuff in there, knowing what's going on. I mean, Jamaica Plain Center has been great. The pond's still there. It's still, a couple new restaurants. Whole Foods doesn't hurt, there.
Right.
So it's just really understanding, and that's the key. We have to understand, I say not just residential, but what's going on also on the commercial and industrial. Like my friend has a condo in Alexandria, Virginia, and he was on his hands and knees praying that Amazon would come in, and they did.
Oh, right.
And he saw increases in rent in his building, and he lives in New York. So just knowing those things, we have to know what's going on. The same way as this plant closed, and we've seen those in the news. It's not good. It's
Right.
going to trickle into the real estate market if a lot of people in the plant live in that little town. So, yeah, it's just having a worldwide view of what's going on, what changed
Right.
when you go back. I like going back, Mike. I like going back to you know, um, different towns and seeing the change and then seeing the change in value. So.
Right. Yeah, it's pretty amazing what will impact even, you're taking these micro looks at the neighborhoods and specifically what homes sold where and for what, but also having to keep your eye on that macro and, where the trends are and people moving. Like I understand, right, or at least I'm reading right now that there's a lot of people like moving out of New York City to go to the New York suburbs or even to Florida.
Mhm.
Um, a lot of it, obviously there's a lot of like political gripes out there at the moment. So you see a lot of that impacting sort of where people are moving and the sort of motivation behind why they're moving, but it impacts, that market they're moving from and that market they're moving to. So
Mhm.
the fluctuation has been kind of interesting to watch.
Yeah, affordability is always going to be a challenge in every market, and people will adjust to it. I mean, I have a family member who moved to Texas because it was affordable.
Right.
And it makes sense. I have people who live in California and they love it.
Yep. Yep. We're pretty regularly at the the higher end of the cost of living as far as Massachusetts and the United States.
We
Uh,
are. We are.
but there's also, plenty of perks for living here. We got, hospitals, schools, the mountains, the beaches. There's plenty of reasons that people are moving to the area, the educational system, medical care. So there's a lot of positive aspects that are keeping those prices high. But, as you said earlier, inventory is, pretty low. It's been a problem for years.
Yep. Yep.
So let's go into what would be some advice that you might give to a homeowner that's currently preparing their property in order to maximize that appraised value?
I think you have to, it's hard to take a non-biased approach, but you have to really look at your property and say, um, okay, the kitchen's older, the bathroom's older, are we going to do it? And that's where getting with a real estate agent, what are we looking at now, value wise? And then if we did work, where would we be? So I think that's a good place to start. You're the consultant, you can consult with them and they can make that determination on if it makes sense or not. So. So I think
Right.
that's a good place to start. Also if there's what I love, Mike, is when I'm doing a home equity and the house down the street just sold, and I'm like, I know why you're doing it now. Like they've done their homework. I want to clap and say, great job. This is the perfect one. Yes, I see what you're doing. So yeah,
Right.
just everyone should have some knowledge about their place.
Yeah, 100%. Yeah, I always sort of tell people, and it's up to their comfort level. Some of them don't want to do any work at all. I was dealing with a seller recently that's just like, just sell the place. I don't care. I'm not doing another thing here. I'm moving to Florida. I want to be done. So we have to sort of ask them, what are you trying to do here? Are you trying to get the most possible money? And you don't care if we have to maybe do some renovating and wait 6 months to actually put this on the market, or do you want to sell it right this second and, potentially sell it for a little bit less than we might if we did some of that work? And leave it up to them. Like you said, it's sort of up to their comfort level, how much they want to get into projects and project management. And all we are is sort of a guide as the real estate agent. But I like to see when people do appraisals before they go on the market, if they're considering going on right away, because it's sort of like a third party. They don't have to rely necessarily as much on the real estate agent. Obviously they're going to get more attention on the property if it's marketed well. That's our job to market it, but also if it's positioned correctly or even a little bit below the market to allow, to maximize the amount of buyers that are walking through the place and maximize the competition, which in turn boosts that potential purchase price up and the strength of the offer terms.
Yeah, I mean, I say knowledge is power, as they say. For a few $100s, you can get an independent appraiser to tell you, and also if you're in a market where, FHA and VA are popular, we could tell you, take care of that issue, take care of this issue. So, we do these all the time. And I've done that many times on estates where I'm like, are you going on the market? Estates are rough. And so I'll say, I think you might have vermiculite because I've remediated and 3 houses are fixed.
Right.
Have someone look at it, deal with it now before the buyer comes through. And she appreciated that, Norwood. So yeah, yeah.
Yeah. So would you yourself advise sellers to do an independent appraisal before they go on the market or before they interview agents?
They can. I mean, we like money, Mike. We do. So, I mean, but I could tell you, I have a lot of friends who are very good agents, and we're very similar in kind of they understand how we think, and vice versa. And I think they do a great job on pricing, as opposed to, because you're fighting that, you have to fight that emotional, I want what this person has. That's the great thing. We come in with, we don't care. It's just, this is what we see based on the market, and yeah, that neighbor's house is 1,000 square feet larger than yours. So no, we wouldn't look at it. It's more renovated. No, it doesn't. Someone doesn't say, I wanted the renovated one, but I'll take the one that needs a lot of work and give them the same price. No, it doesn't compute. So
Right. Right. Yeah, it makes complete sense. Yeah, all we can do is sort of try to meet our sellers where they're at and sort of deliver them. I mean, at the end of the day, we're marketers. Our job is to market it, not to tell them what we think someone's going to pay for the property. Because at the end of the day, me, another appraiser, another agent, is they're not going to be able to actually tell the seller what someone is going to pay for their home until they go on the market and open up their property to, the maximum amount of people and get it in front of 1 million people, market it well. No one can tell you what someone's willing to pay for your home until someone's holding an offer in their hand with that number on it
it's true.
and the
It's
offer
true.
terms to back it up. So that's sort of the conversation that we have with a lot of sellers. Like, they're many times making a decision, or they go into the interviewing an agent process, thinking, okay, well, their commission is X and the home value is Y. I'm going to do some simple math here and figure out how I'm going to get the most for my money, instead of asking, all right, what is this agent going to do specifically to get my home in front of the maximum amount of people in order to create that environment where I'm going to potentially maximize my equity, potentially maximize the offer prices, and not just that, but the offer terms, the other offer terms to back it up, which a lot of people don't really consider until the offers start coming in, and the rest of the terms don't really back up that number on the offer line.
Sure. Well, managing expectations, that's your part.
Yeah, that's all it is. Um, but anyway, Daniel, tell people where they can find you if they wanted to get like an independent appraisal in Massachusetts or New Hampshire.
Sure. Yeah. So we are on the website. We have clients that actually order from our website. Our company name is DC Valuations, so my initials. So they can Google dcvaluations.com or DCVal. I've shortened it, so our emails aren't ridiculously long.com. And they can Google my name too as well, Danyl Collings, and they could find us there as well. So.
All right, perfect. Well, for the purposes of this video, I'll drop all of that information in the description below. But yeah, I wanted to thank you again for your time. Really appreciate you spending some time with me and giving me a shot at my first Zoom interview here with another professional that in a real estate adjacent industry. So thank you very much, and I'll be seeing you soon.